Good afternoon, traders. Welcome to this week's wrap, and I'm Joseph from Eightcap. Thank you very much for tuning in and for your time today. So, really, this week has again been mainly about inflation, Fed policy, and a couple of other more localized issues as well from the AUD and the RBA, and we'll get into that in a minute. But firstly, we're looking at the USD, and that's the USD index, and we're just going to talk about some of the news that came out this week. So it all really started with the CPI data on early Wednesday morning local time, and we saw the year-on-year increase to 6.4, and as expected, we saw an increase on the month-on-month to 0.5. Now, we also saw the core come in at 0.4% as well, which is expected, and an increase on the last data. So this really didn't rattle too many feathers. The markets reacted okay to it, and then we followed on that this week with more data coming out from retail sales from the US, and these figures as well came in much higher than expected. So there was a fair bit of a shock with these figures. They came in, we're talking retail sales came in at 3%, nearly double the 1.9 expected, and way above the minus 1.1 we saw last time. So again, this sort of added to the idea that maybe the economy could be a bit hot. Stocks and big cryptocurrencies didn't really take it that way. We saw rallies. Things changed obviously last night, but we can see that the dollar has had a very solid week, and it's broken above this resistance level here, and it looks like this trend is forming and starting to get underway. So we'd like to see what happens when if price gets back up to this level at 105. We'll see if buyers can not only test it or break that level. We'll see if we can get back there. So we will get onto some of the stock indexes soon. We just wanted to touch on the US dollar as it does continue to show signs of a new up leg in motion. And I think the kicker last night, early this morning / last night for us here, was the core PPI. And it looks like the old saying, the straw that broke the camel's back. It looks like that may have been the case. We had a higher PPI. It came in at 0.7%, well above the 0.4% expected, and the core PPI came in at 0.5%. Again, above the 0.3. But I think the real crust here is the last data was minus 0.2 and 0.3 for the core, and both of yesterday's figures beat those figures once again. So I think that is set off some alarm bells and some worries, and we did hear some comments as well from other Fed members, and some of those comments were moving back towards the hawkish side of the fence. For instance, Fred's Bullard was advocating for a half-point increase at the last Fed meeting, and to get inflation adequately under control, and to also get back to a restrictive level much faster. So these voices are still present, and I think combine that with the two higher data readings, I think that did set off a few minor alarm bells, and it is carrying over into today's session. We're seeing the US dollar trading 0.27% higher, and risk currencies are lower. The dollar is higher to the CAD. And obviously, we are seeing gold trading lower as well, and but we are seeing a mixed session from the risk majors, because they are trading higher to the Japanese yen at the moment. A new Bank of Japan governor has been selected as well. That was sort of discussed last week, but that's sort of been confirmed now. So we will see his policies as things move forward. And also now we're just going to touch on the Aussie. So yes, the dollar is stronger and the Aussie is going a bit weaker at the moment, and we can see this decline here. But we had some interesting situation with the Aussie this week, as not everybody, but the story is that we had comments from our governor saying that interest rates wouldn't rise until 2023, and that was proven to be incorrect as inflation jumped last year and we saw rate rises last year. It's caught a lot of people in the public off guard and set off a pretty negative opinion of the current governor, and it's all been accumulating with even calls for him to be replaced. Now, something that did happen this week was a bit of a surprise in a sense. The RBA did say they expected it to a degree, but it definitely looks like it's caught the market off guard a tiny bit. We had some pretty average employment data come through. Job employment change came in at minus 11.5k, and unemployment increased to 3.7%. So yes, the economy is feeling the effects. It is starting to slow down, but comments today from Governor Lowy saying that if there is further weak employment, they may have to evaluate if the labour market is starting to become too tight, and this also could impact the possibility on expectations for more rate hikes. So this combined with the higher USD is really hurting the Aussie today, especially, and the Aussie has been having a pretty bad week, but it's no real surprise with the dollar making a bit of a run. Now the pound is another that is sort of just breaking below that previous low, and we'll just update that, and is starting to form a new breakout. We're watching these short-term support points here, and they're starting to be broken. I would like to see what happens with the pound if it can get down to this level at 1.897, and if we will see some more support coming there, as that did start this up leg here that was the previous rally before this round of selling set in. And it's a similar story with the euro as well. We're seeing a break of that short-term support, and if we do see further falls, we'd like to see what happens at this level if sellers are able to get down there. It's a fair distance to go at the moment. It's over 1,000 pips, and it's 1.26%. So we will continue to see if the US dollar run can continue to fire. Now, gold this week has been pretty standard with the dollar rising and other aspects pointing to a higher dollar. We are seeing gold decline. This trend looks to be broken now, and we've had that lower high complete, and we're seeing a continued move lower on gold. Now, stock indices were quite interesting this week. So we saw some... Sorry about that. It's always itchy when the camera's on. So we've seen some declines. Yesterday was a decent decline on the US 30. It really got going at the end of the New York session. It hit session lows, and that was after some of the comments coming out, which was on top of that data. And the ASX as well had a bit of a blip yesterday, but is trading pretty solidly lower at this stage in the day. And some of the European exchanges, which we've been watching, have started to turn. And for instance, with the DAX, we are seeing a second day of declines. The futures are lower after opening at a gap lower, and we're seeing a little bit of resistance now popping up at 15,572. And we also are seeing on the CAC as well, which has been a really strong market of late. We'll just update that. We can see yesterday's very high push higher, but we are seeing a little bit of selling off the top today. So we'll see if there is further selling today, if we do finally see a lower day breaking, what has been a 3-day winning streak on the France 40. Now we will touch on crypto and oil, but oil first. So oil has been pretty average, to be honest with you. There's not too much going on with it. It still sits in this big range. It's sort of tried to get above midpoint, but that failed, and we've seen another small move down, and it's really not doing a lot. And I think it's waiting for a influence. We did hear of output cuts, and production cuts from Russia, but that doesn't look to have done too much to get buyers interested at this stage. Now, crypto, finally, we saw some fantastic moves this week, and that was yesterday. Today's candle is here. We saw just a day ago some fantastic rallies that set off new yearly highs for Bitcoin, and a similar story for Ethereum. We touched levels not seen in really since 2022, and we are still struggling at this resistance point at 1683. Crypto still looks pretty good. It still looks pretty firm, and even though we are seeing a bit of weakness today and some weakness last night, some of the key the bigger markets like Bitcoin and Ethereum, we'll continue to see if they can continue to push higher at this stage. So some of the others, Avalanche, for instance, there is a lower high setting up here, so that's something to watch as well. And we're same here with Canando. We had a bit of a fail at that key resistance here. So today we are seeing a bit of a fight back on ADA after a real failed push high yesterday. But these trends still look okay at the moment. The worry is if we do see further, distribution set up into a bit of a range pattern. That could be a bit of a worry that we could be seeing, distribution, which could lead to a bit of a push lower. But as long as price can hold above the 50% point of this rally here, we'll continue to look at it from a positive favor. But that all may come down to if we do see some drastic changes in the Fed policy and with off this recent inflation data. So that's really just the main wrap this week. We'll have a look at some of the things that there's no key data coming out tonight, but we'll have a touch on some of the more important ones to keep an eye on next week. And we have 2 bank holidays. So Tuesday is a bank holiday in the US and Canada. There's nothing really super important coming on Monday. Into Tuesday, we have flash and services PMI data coming out from Europe and the UK, and also from the US. Normally, it comes out. So we have CPI data for Canada coming out on Wednesday. Flash services is coming out Wednesday morning, and manufacturing for the US. And we have a bit of data coming out from Australia, which is a wage price index. And then we have the Reserve Bank of New Zealand's interest rate decision. That's on Wednesday. And Thursday, we have FOMC meeting minutes, a bank holiday in Japan, and we have US prelim GDP on Friday and the core PCE price index from the US on early Saturday morning. So there are a few other things to look out for next week. It's some decent news coming out next week. Maybe not as critical as this week, but the PCE will be on to watch, and some of the other data that comes out. So that's it for today's update. Thank you very much for your time. If you enjoy our content, please feel free to subscribe. And if you have any comments and you'd like to make any observations to us, please feel free to drop us a comment. That we'd love to hear from you. So thanks again. Have a fantastic weekend, and all the best for you trading for today, and until our next time we do a report. So thank you, and bye for now.